This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, December 3rd, 2018. Last week, commodity prices and economic reports were mostly mixed. U.S. steel production fell slightly, but remains near the multi-year high it recently hit as tariffs remain in place against most major steel importers. Tariffs are now viewed as a nice revenue source in place of taxes on U.S. companies. Oil fell 45 cents a barrel to 50.85 on an oversupply and a global economic downturn and all the concerns around it. U.S. oil production remains steady at 11.7 million barrels a day, the record it hit a few weeks ago. Low prices will slow this production increase, or we could even see a small decline. Iron ore fell $7 a ton to $65 a ton on news of a major steel glut in China as global markets remain slowing in some industries. Scrap steel number one heavy melt remains at $333 gross ton with some signs of slowing demand. There is some but little upward pressure. Hot rolled coil steel remained at $1,085 near the multi-year high as tariffs remain in place and demand remains okay mixed with some economic slowing. Copper rose 2 cents to $2.79 as markets continue to struggle with tariffs and slow global demand issues. But it is up another 5 cents this morning on the new tariff news we're about to discuss. The 5-year copper chart shows prices remain in a range for about the past 6 months due to the continued positive and negative news. Aluminum was up about a half cent to 87.8 cents, remaining near the 1-year low on slowing markets across many global industries. Saturday, the U.S. and China called a 90-day truce in the trade war. Tariffs will stay at 10% on most goods versus going to 25% on many items. Note the somewhat unrelated 25% steel and 10% aluminum tariffs with many countries, including Canada, Mexico, and China, still remain in place. Congratulations to Steel Dynamics, who owns OmniSource, on the announcement of a $1.75 billion investment in a new flat-rolled coil steel facility. GM announced major plant closings as they continue to lose market share, markets remain slowing, and tariffs have caused their costs to increase by $1 billion. GM, Ford, and Fiat Chrysler are focusing on pickup trucks, SUVs, and crossovers as they abdicate the car business to Toyota and Honda with their Camry, Corolla, Civic, and Accord. October's U.S. pending home sales fell 6.7% from last October. This is the 10th consecutive month of decline and the steepest drop in over 4 years. Higher interest rates, higher priced homes, and high student debt are hurting the markets. November's U.S. sales of single-family homes fell 8.9% from October, which is the lowest level in about 2.5 years. At the same time, we're seeing that higher interest rates, higher priced homes, and the higher student debt is hurting the markets as we just discussed. Jerome Powell, head of the U.S. Federal Reserve, said about 2 months ago interest rates needed to continue to rise to cool the economy. Last Thursday, though, he said interest rates were close to being right, meaning there will be fewer increases in the next 12 months. But one will probably still come in a few weeks. U.S. weekly initial unemployment claims were still relatively low, but they were actually the highest in 6 months, with some signs of the slowing in the U.S. economy. The third quarter U.S. growth rate was confirmed at 3.5%, a nice number. The year-over-year growth due to this year's tax cuts will be tough to continue, though, next year. October's U.S. personal income, which is mostly made up of wages and salaries, rose a big 0.5%, the largest increase since January, which actually is inflationary. But thanks to the recent drop in oil, inflation overall may be staying low. The Dow Jones Industrial Average rose a huge 1,267 points to 25,553 on positive news about the possible trade deal with China and news that interest rates may actually be cooling off, as we just said. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.